What's up, creatives? Welcome to the Tiffy Show. Today I will be talking about how I pick stocks for investing. If you haven't, make sure that you turn on notifications so that you know when I post a video. I like to post about lifestyle, dating, travel, and investing. So if that is your jam, hit that subscribe button and let's get to it. Quick disclaimer, I'm not a financial advisor. These are just my thoughts and opinions. Take them with a grain of salt. So, how do I pick stocks for investing? This is a number one question that I think anyone that invests in stocks gets from beginners. So that's why I want to break it down for you, because everyone's system is completely different. I want you to see my system, and if you see things that you like, you can add them to what you decide to do, or if you don't, that's fine too. But you're going to create your own strategy and way of doing things when you begin to invest in stocks. Now, my history with stocks, I started when I was in high school. My dad taught me the basics and I loved doing it then. Over the last few years, I've gotten more involved and I've kind of transitioned into also doing swing trading. Now, I'm not going to be talking about swing trading in this video, but I will do so in future videos. This video is mostly how I pick my stocks for long-term investments. When choosing stocks for the first time, it's best to decide what you are interested in, because these are your investments. This is news that you are going to have to read about and it needs to interest you. So if you have specific sectors that you like better than others, finance, tech, then you should stick with those in terms of research, because you'll be more interested in learning about those companies and seeing what they're all about. Now, when I'm looking for new companies to invest in, I like to look at Yahoo News, Reddit, Robinhood Snacks, and also use a stock screener like the one that is on TradingView, but there's some that are on Market Watch, I think has a free stock screener, and those are different avenues you can go when you're diving right in. And I just like to breeze the news and look at it every morning and see what companies people are talking about. You can even follow a few, I wouldn't suggest a lot, but a few people on Twitter that talk about finance and see what they're talking about. And when I hear about a company, I write it down and I just create a list. And then with this list, I go in later and I analyze their charts, which we will get to. But first things first, you must create a list and you have to know what interests you, because you need to analyze this stuff all the time. So make sure that when you're doing this, you're paying attention to like what companies, what sectors, what industries you like to learn about. Also, if I'm like, I don't know where to start, sometimes I will go look at mutual funds, which I mentioned in a previous video. I'll go look at mutual funds, I'll see the top stocks in there, see what's going on with those, write those down. If I'm out with friends and they mention a company or they mention, an industry, I'll write it down in a note in my phone. There's always endless opportunities for you to research stocks and be ahead of the game in terms of what people are talking about. Then the fun part comes. Once I have my list of stocks that I want to research, I begin the analyzation. I get to analyze the stocks, which is my favorite part, because this is going to weed out who you don't want to invest in and who you're more interested in. And the first question that I ask myself before I even really get into the chart, when I'm learning the fundamentals of a company, is why do I want to buy this company? And here is how you break that down. I like to pick stocks that have growth potential, that are leaders in their industry, that are doing good, that are the best, the top of the top. And in order to see that, sometimes you need to make sure that they have an economic moat. And what an economic moat is, if you think about back in the day where there was a moat around a castle, it was how big that moat was in relation to how safe that castle would be. The enemies could not pass that moat if it was huge and wide, but if it was small, they just jump right over it and then kill everybody. So you don't want your moat to be small, you want it to be big. And some moats to look out for when you're looking at companies and you don't know where to start are these: strong brand name, trade work effects, cost advantage. Think in terms of cost advantage, just think about how Walmart just kills the game in terms of being so cheap that people can't really compete with their prices. So that's a cost advantage you can look at. Network effects is basically like how everyone's on Instagram, everyone's on Facebook. How do you compete with Facebook? How do you get people off Facebook? You really can't, because people are just on there. So that's a network effect. And another one is they have a platform, and that could be Shopify. For instance, a company gets on Shopify, it's easy to use, it has great customer service, they have their shop on there fast, they're making sales, the chances of them leaving Shopify and going to a competitor is really slim because Shopify just has so many advantages for them. So that's another thing that you can look at. So those are economic moats, and you want to make sure that the company that you're looking into has one of those. So with the economic moat, you're just looking for the best companies that have growth potential and that are going to be around for the long term because they have no competitors, or the competitors are really, really far away because of that moat. Once I have my economic moat down and why I want to buy a company, I move on to their profile and really get to start analyzing their earnings and profitability. Now, I like to use TradingView, and it actually has a free account that can show you all of this very simply. And then if you'd like to get more in depth or you really get into investing in stocks, you can upgrade to one of their paid profiles and really get deep into it. The free account is fine in regards to what I'm going to explain. So you want to make sure that the stock is consistently beating their earnings every quarter. And you can see that easily on TradingView. And I like to see that they're doing that and that there's growth and that there's profitability. Now, from there, I then like to look at the return on invested capital. And this is just how much cost it takes to make a profit. And what you like to see is that a company can do a lot with a little and make profit. When you're looking at return on invested capital, I like to look at return on invested capital that is in double digits, so 10% and higher. Of course, if you can see, or if you look and you want to research the last few years, that's awesome. Make sure you take a look at it, because what you want to see is that the return on invested capital is continuously growing, meaning that they're continuously growing their company and they're also getting good returns. Now, if you happen to see a dip, so it's not always increasing, that's okay. Take a look at how much they're investing in their company. Sometimes a company starts to invest more. They take a bit of a hit because they're trying to grow their company. So the return on invested capital might be a little bit lower, but it's not necessarily a bad thing. It just means that they're growing as a company. So make sure you pay attention to that. I don't really like to touch companies unless they're brand new and their growth that has more volatility, which I'll talk about. I don't usually, for long-term investments, suggest to a newbie to invest in any companies that have a return on invested capital that is below 10%. But as you grow into this investing world, you can invest in ones that have it lower than 10%. Those are usually like startups, tech companies, things like that, because they do have potential. But right now, I'm just helping you out as a beginner in choosing the right stocks for a long-term investment portfolio. Next, I glance at the free cash flow. Really simply, go look, free cash flow. That's how much money they have to reinvest or do things if shit pops off. So it's good to know that they have some money right there in case they need it for an emergency. After I look at the free cash flow, I head over to debt. Now, debt is something that people get scared about, but it's not so scary. And the thing with debt is you just don't want your company to be swimming in it, okay? As a small business owner myself, debt is just something that you have to come to terms with. But you can look at the debt to, I say debt weird, let it go, people. Look at the debt to equity ratio. If it is higher, it means that it is riskier, but the returns could be higher. And if it's lower, then it's not as risky and the returns are lower. So that's the volatility there. Now, I'm going to give you an example of debt to equity ratio so that you can see how it works in real time. Amazon has a debt to equity ratio of 0.98, which means for every dollar they make, they owe 98 cents to creditors and debt, basically. So you see, that's a high one. But Amazon is not a sucky company. It's a good company. And that's why I say don't put all your thought into a company's debt, because it doesn't make them a bad company. It overall picture is just letting you know that they have some debt, and some debt is okay. And for a lot of growth companies, you're going to see debt. As I mentioned, the higher the ratio, the riskier the company, but the higher the returns. And that's most growth companies. So as I say, take debt however you want to take it, but remember that a lot of companies will have it. All right, let's get to the chart. Let's get to the chart. So I look at growth, I look at the chart. Charts are fun. I use TradingView and it just gets more exciting and fun. That's when you really get to the nitty-gritty of a company and how they've been performing over the last year, over the last 6 months, over the last month. However you want to do it, you are going to figure out what works best for you. I like to look at candlesticks for deep dive and swing trading, but on regular days, I just like to look at the line chart. Line chart tells me everything I need to know about a company for long-term investing, and I think you'll like the line chart too. It's simple dimple and it's easy to read. I mean, we all read line charts probably in work and school and unnecessary things, so you're probably used to a line chart. When you're looking at a chart, just to simplify it, you want to make sure that whatever you're looking at is in an uptrend. Whether you're looking at the year chart, the 6-month chart, or the month chart, you just want to buy something that is growing, that is doing well as a company. Now, that is just a simplified way of looking at the chart. If you'd like me to go in future videos and talk about the indicators I use, moving averages, MACD, RSI, trailing stops, all of that good stuff, I will do it in a video, but this is just a video to simplify how to just glance at a company and see if you want it to be a pick for your long-term investment. Once I've done all that, I decide what price I want to go in on a stock, and the rest is an investment. So if you enjoyed this video, make sure that you share, like, subscribe, and comment below, and let me know how your investing is going, and I will see you next time. Stay creative.